Very good morning to the students. This video is meant for class 11th and in this particular video we'll discuss about accounting rules. Accounting rules as in debit and credit rules. So in my previous video I have already explained to you in detail the three types of accounts. So without wasting time, let's start off with the accounting rules. Okay, for personal accounts the rule is debit the receiver, okay, and credit the giver. Personal account rule, I repeat, the accounting rule for personal accounts is debit the receiver and credit the giver. For real accounts if you remember are the accounts related to assets. Assets are things of value owned by a business. The rule is debit what comes in and credit what goes out. Now these rules will make more sense when we start with the journal entries. Okay, right now you have to learn nominal accounts. Nominal account, if you remember, are the accounts related to expenses, losses, incomes and gains. So let's start with the rule. Debit all expenses and losses, credit all incomes and gains. So now you can take a screenshot of this, and I'm sure these are in your textbooks as well. So you learn these rules by heart. Otherwise, you will be confused in accounts. You have to have learned these three golden rules we call accounting rules. In addition to these three accounting rules, we have additional rules. Now, to know the additional rules, I'll tell you something that, let's say, first rule is related to asset account. An account we make in a T format. Can you see this big T? Left side is for debit. Debit in short is denoted by DR as I've written. And the right hand side denotes the credit side. Short form for credit is CR. Now, plus I'm mentioning positive sign on the debit and negative sign on the credit. How do we learn this? Accounting rule. To increase asset account, debit it. To decrease asset account, credit it. See, to increase we add, that is positive sign. That's why, that's the reason, that's the logic I have mentioned the positive sign on the debit side of the asset account, because to increase asset account we debit the asset account, and to decrease asset account, to decrease, that is minus. That's why this minus sign you can see on the credit side. That's how you learn the rule for asset account. Second rule is for liability account. Liability is any amount which a business firm has to pay to the outsiders. Amount payable by a business firm to the outsiders. Let's say goods have been purchased on credit, so the amount, for whatever amount the goods have been bought, that amount has to be paid back to the supplier from whom the goods have been bought. Plus on the credit and minus sign on the debit. How do we learn? First we learn for the increase. To increase liability account, credit it, and to decrease liability account, debit it. Okay, take a screenshot of this and learn. I'm proceeding with next tool. Next tool is pertaining to capital account. Capital is the money or money's worth invested in the business firm by the owner. Positive sign on the credit and negative sign on the minus sign on the debit. How do we learn this? To increase capital account, credit it, and to decrease capital account, debit it. Okay, here is the rule for the next rule for expense, and it's also related to loss. Expense or loss account, I'm clubbing them together. But don't think that expense and loss are the same. No. Expense is flow of money, outflow of money, which gives you benefit in return. But in case of loss, it's outflow of money or money's worth without any benefit in return. It gives you just frustration. Okay, so expense gives you benefit in return, loss doesn't give you anything in return. In both the cases, money or money's worth goes out of the business. Okay, so how do we learn this? Let me shorten this line and adjust it here. By now you must be clear. We mentioned for the increase first, therefore to increase expense or any loss account, debit it. To decrease expense or loss account, credit it. Okay, and now next tool is for revenue or income. Revenue, children, is the money received by a business firm by selling goods and services, or it's all even called income also. This is pertaining to revenue or income account, whatever money is received by selling goods and service or goods or services, not to be confused with profit, because to find out the profit we need to deduct from the revenue the cost. Anyways, we'll discuss all that later on. Now here the rule is, let's focus on the rule. Positive sign comes on the credit and the negative sign comes on the debit. Therefore, how do we put it? To increase revenue or income account, credit it. To decrease revenue or income account, debit it. So that's it for this short video. In this video, we just focus on the accounting rules. Learn these rules. Take a screenshot of this, and this one also. So additional rules are 5. Asset account rule, liability account rule, capital account, expense account, and the last one is for revenue account. Apart from these 5 additional rules, there are 3 golden rules. which I've written for personal account, for real account, and for normal account. So today's kind of homework is you learn these rules. In my next video, I'll start with journal, where I'll make it clear to you how to apply these rules. With that, I conclude the video. Okay, take care.